Today, we're diving into market opportunity blueprint, validating demand before you scale. So, we designed this session as part of our 20-week founder lock in challenge. So, if this is your first time, this is week 2. So, if we didn't see you in week 1, welcome. And we started this because so many founders, leaders, entrepreneurs in our community told us they were ready to lock in and use this season to expand their business. So here's what this challenge is all about. We're going to give you the same structure and momentum we build with our private clients. And we're going to do that in a modular way. And then each week is meant to build on the last. So if you follow along, you'll walk away with the same kinds of outputs our one-on-one clients develop. Only now the hope is you can do it yourself step by step with us as your guide. So here's my promise for you today. By the end of this session, you'll know exactly how to validate demand for your idea, and not just by asking if people like it, but by proving, do they actually want this? Why would they choose you? How are they solving this problem right now? And can you validate the purchase action before building the whole thing? All right. So let's get started. If you're joining us, please feel free to place in the chat, tell us more about you, so we can get to know who you are. All right, so before we dive in, I want to give you just a little bit of context of who we are and why we're running this challenge. So Copper and Vine Studio was founded and back in around 2006. We rebranded in 2009. And over the last 20 years, I've had the privilege of launching more than 400 products across Fortune 500 and 100 companies, government agencies, nonprofits, and startups. So what that means is we sit at the intersection of product strategy, design, architecture, compliance, and engineering. So when we talk about validation, scaling, or compliance, we're not just teaching theory, but we're bringing lessons from hundreds of builds that had to work in the real world. So just kind of our approach around that is we're founder centered. Everything we do is aligned with our founders' bandwidth, their vision, and their priorities. We're outcome driven, so we don't create decks for the sake of it, right? Everything we produce is tied to adoption. And we're compliance first. From HIPAA to GDPR and accessibility, security, and beyond, we really bake those things in from day one so our clients don't get derailed later. And then just a bit about me before we jump in. My name is Rakia Finley. I'm really honored to be the CEO of Copper and Vine. I started my career as a full stack developer at 19 years old, right? I built my first agency in 2003. And back then I was advancing digital transformation for nonprofits and hospitals. So that work opened doors to larger engagements with organizations like Salesforce, Starwood Hotels, and the American Bar Association. Over time, my focus has shifted into equity strategy, and I've become obsessed with outcomes. I realized technology alone wasn't enough. What matters was building responsibly, building inclusively, and building in ways that actually delivered results. So that led me to found Copper and Vine Studio with a mission of centering equity and innovation. So since then, I've spent the last 2 decades at the intersection of technology, equity, and innovation, building products, scaling teams, and advising leaders across Fortune 100 companies, government, startups, and global organizations. I've had the honor of really shaping frameworks adopted by some of the world's largest companies, advising global campaigns with the Obama administration, and being recognized as the first Black woman to lead an AI product firm in North America. Along the way, I've taught, I've spoken, I've trained leaders around the world on how to validate bold ideas with integrity and build organizations that last. And here's a through line of all of this, right? I've seen brilliant products die because they weren't validated early. And I've seen scrappy ideas turn into multi-million-dollar valuations because they nailed validation before scale. So that's why I'm really here for you today, to help you avoid costly mistakes and give you a repeatable playbook for testing demand and proving your market before you over invest in building. So now I usually don't host workshops like this. I'm usually not online like this. That's why your feedback to us putting these together means so much. But most of our work happens in private engagements and global trainings or keynote stages. But today I'm opening up the exact principles and practices we use inside of Copper and Vine to really help save you some time and help entrepreneurs and enterprises unlock growth and scale responsibly. So this is your turn to kind of learn directly from the playbook that really drives our work, and that has driven our work for the past decade or so, and to apply it in real time to your own company, organization, or idea. So here's why validation is personal to me. One of my latest ventures is Our Turn, built by Copper and Vine, right? Our Turn actually started as a simple journaling app. The temptation was to build the whole thing right away, but instead we took a different approach. We ran lightweight tests, small cohorts, short feedback cycles, and low-cost experiments, and then we validated demand. We then tested engagement. Then we proved that people were not only excited about the idea, but willing to pay for the emotional value it delivered. That validation shaped our roadmap. It gave us the clarity to know what matters to build first and what could wait. And what got us accepted into venture programs and open doors for funding conversations is the same strategy I hope to teach you today. How not to overbuild, how to validate early, how to validate often, and how to let the data shape the product. So if you're interested in experiencing Our Turn for yourself, feel free to scan that QR code, or you can just go to ourturn.app. I'll put it in the chat for you all. So every business, no matter the industry, moves through these stages. We talked last week about clarity, vision, and goals, right? That was our focus last week around defining what success looks like and where you want to go. Now, validate market, that's today's focus. Before you spend money, time, or additional energy building the full product, you need to prove that people actually want what you're creating. And more importantly, that they'll take action, whether it's committing to a pilot, signing a letter of support, or pulling out their wallet. So defining from there, and what we get to continue to do is we're going to be defining offering. Once you know the market is real, you can package your solution in a way that's deliverable and scalable. Then we're going to set KPIs, because without clear success metrics, you can't measure traction. We'll build SOPs from there. We're talking systems and processes that keeps your growth sustainable. Doesn't just allow you to turn on that virtual assistant, but actually scales your concept. We'll pilot and iterate. I'll talk a bit about what that looks like today. It's about running small launches, small experiments, and gathering feedback and adjusting. And then our step from there, moving down to our vision, is execute and scale. That allows us to know that we're only doing what we need to do and putting resources where we need to put in that allows us to move ahead. So what I love about this funnel is that it's iterative. You'll notice the arrows looping back, right? Every new layer of growth should refine your vision and your strategy. So today we're diving into step 2, market validation. Last week in step 1, you should have produced a clarified vision and goals, something you could measure yourself against. Now we're going to be moving into validation. We're going to be bridging between your bold vision and your scalable execution. So as a quick reminder, in case you haven't, we had an assignment for last week. You work through your founder vision map. And if you completed it, you should have a clear snapshot of your 5-year long-term vision. You should have values that you want your business to reflect, and 3 goals that you want to achieve in the next 12 months, and your ultimate measure of success. So here's why that's going to matter today. Your vision is going to become the anchor for your validation. So when we test the market, we're not just asking, do people like this idea? We're asking, does this idea align with my long-term vision? Will this market actually support the goals I've set? So as we go through today's exercises, I want you to keep your vision map handy. And you want to think of today as putting your vision to the test in the real world. So again, last week we talked about clarifying your vision and setting bold goals. That's always where we start. But because without a clear destination of where we want to go, it's kind of impossible to know how to validate, measure, or build towards that goal. So now I want to connect that vision to the broader framework we'll keep coming back to, what I call the 5 keys to scale. So one is market. Do people actually want this? That's what today is all about, validation. Next is experience. Once you know the market is real, you design the experience. Once you know the market is real, you design the experience, how customers, clients, and users engage with your solution. Then we go to processes, that's systems and SOPs that make growth sustainable. KPIs are the success metrics that prove traction and credibility, and then growth is putting it all together to expand responsibility and profitability. So today we're digging into key number 1, market, because before we scale, you need proof that your idea has demand and that people are willing to take action on it. So I want to acknowledge something, right? Right now, we live in a business culture that tells us to move fast. We live in a culture that tells us to iterate and get to market quickly. And at no point of this webinar do I want you to hear that I'm trying to counteract that advice. I'm not trying to counteract that advice. Execution speed matters. But what I'm challenging you on is this: what you execute should be backed by validation. Now that you've written down your vision from week 1, you should be able to see the assumptions you've produced around your vision. That's the power of putting things on paper. It kind of forces a sense of higher level clarity. So here's a trap I see a lot of our founders that come to us fall into or have fallen into, right? They jump straight from vision into execution, or they pour, 50K plus into development, or they spend a year building out a program. And only then do they discover that their market doesn't care or that their buyers don't take action. That's where the risk kind of lives, right? That rush of vision to execution. Validation is what closes that gap of risk. So let me give you a perspective. I always carry with me, building a business isn't about one giant leap forward, right? It's about refinement, that chisel. So one decision, one test, one milestone at a time. So each cut feels small, but together they reveal the shape of the business you're meant to build. So when you feel overwhelmed around your big vision, and trust me, you will feel overwhelmed, you get to remember you don't need to do everything now, and you need to move forward steadily and deliberately. Because every validated step protects your resources. It's meant to build your credibility and keep you aligned to your vision, right? So that's what I mean when I say believe in that chisel. So here's something most founders and leaders don't talk about enough. Revenue is not the only proof point that matters. Yes, revenue is powerful. Yes, it keeps the lights on. But especially in the early stages, credibility often carries more weight than cash. So I want you to think about it when you're pitching a funder or you're walking into a boardroom or trying to land your first enterprise client. What they're really looking for is, do you have evidence that people actually want this? Do stakeholders trust you to deliver? And have you shown that your idea holds water outside of your own head? outside of your own head, right? So that's what credibility is. And credibility can come in many forms. It can come in signed letters of support, early pilots, testimonials, partnerships. It can even come in a growing wait list. So the reality is, a stack of commitments can often be more powerful than a stack of cash because commitments show confidence, and confidence is what attracts the next layer of revenue. So when we talk about validation, we're talking about building both sides of the scale. Yes, proof of revenue, but also proof of credibility. The balance is what makes your business investable, fundable, and scalable. So here's a choice every founder tends to face. And honestly, every leader inside a company usually faces this as well. On the left, you see what happens when we skip validation. The path looks fast at first, but it's kind of full of broken bridges, dead ends, and hidden traps. This is what happens when you assume the market wants what you're building without testing it. You're going to burn time, money, and energy. And sometimes the whole pathway collapses under you. On the right, you see the validated pathway. It's not perfectly straight, but it's clear. Every curve is intentional. Every step forward has been tested. Validation gives you that smoother road. It doesn't mean there won't be challenges, but it does mean your pathway leads somewhere real. Growth, credibility, and sustainable scale. That's the focus in validation. So this is a choice we're here to talk about. Do you want to take the risky shortcut? It's a lot more eventful, I'll tell you that. Or do you want to build a highway that actually gets you to the city on the horizon, right? So when we talk about validation, I want you to remember this equation. Validation equals credibility, confidence, traction. Credibility means others believe your idea has weight. It could be a letter of support, MOU, a customer who says, yes, I would love to pilot this, that external proof that's meant to build trust. Next is confidence. It's what it gives you as a founder or a leader. It's instead of second guessing, you now have data and signals that tell you I'm building in the right direction. Traction is what investors, funders, and partners look for. So confidence is for you, traction is for them. Even if you don't yet have revenue, validation is going to give you momentum. So something real to point to that shows this isn't just an idea, it's a movement. That's what traction is meant to do. And that's why validation is so powerful, right? It's not just about testing an assumption, it's about unlocking all three at once: credibility in the market, confidence in your decisions, and traction that attracts the right people and capital to your business. So here's how this shows up in our companies and startups that are taking a funding round. I just wanted to kind of pin this for my fundraisers in the room. So across markets, only about 1 in 5 seed stage companies graduate to Series A. And this is over my 20 years of experience, right? The median time to get there is around 18 to 24 months to get from to that seed round to that Series A round. And only 20% tend to get there. That's not meant to scare you, right? It's meant to focus you. So here's what we see across our clients and in the market. It's not glossy decks or big TAM slides that get you through that funnel. It's proof points, not promises. So engagement is people actually using what you've built. Retention, do they come back at 4, 8, 12 weeks, or do they drop off? Net revenue retention, NRR, net revenue retention. Once they start, are they expanding their use or spending more? And I just to put a note in that, I feel a lot of founders tend to not pay enough attention around your NRR, your net revenue retention. And then LOIs and MOUs. Do you have community and partner commitments, signatures? Do you have potential customer deposits. Even if revenue isn't fully there yet, do you have something that identifies commitment? These are credibility signals that tend to say we're solving a real problem right now. So here's the mindset shift that I want my startups to have that are fundraising. Validation is the shortest path to leverage and better terms, right? We want a good term sheet. Validation supports a successful term sheet. And I'm, as someone who has raised over 10 years, I've raised and go through some sense of funding and acquisition round for not only my own startups, but for the startups of others on a monthly basis. So I can tell you validation is the shortest path to leverage. Now, the more you can show sticky value and real behavior change before you raise, the more negotiating power you're going to have on validation, dilution, and board control terms. So if you go a few layers deeper into that, at pre-seed or seed, you don't need millions in revenue, but you do need validation. You need problem proof, engagement signals, and early letters of support. By Series A, expectations rise. Many investors want $1 to $3 million in ARR, right? Or equivalent enterprise traction, plus evidence of capital efficiency, how effectively you turn dollars into traction. And let's name it, right? AI. I want to just pin what AI should mean for your startup and for your funding right now. AI is not a strategy, right? It is simply saying we're AI powered. There is no strategy in saying that we're AI powered. That's not just going to get you funded. It won't get you funded. You need to show where AI drives efficiency in your operations or creates a defensible moat in your product. Otherwise, your AI is just noise. So on the legal side, for my founders, I want you to also remember that boring is beautiful. Investors want to see a clean Delaware C Corp. They want to see a clear IP assignments, standard equity docs. So if your setup looks unusual or messy, that's a red flag. And you don't just focus on valuation. You want to watch and control terms just as closely. Board seats, observer rights, or side letters that never sunset can quietly take away your ability to lead. One last point is if you structure correctly, you also may qualify for the QSBS, the Qualified Small Business Stock. This can shield up to about $10 to $15 million in gains from taxes later. And it's one more reason to get the setup right early. So here's the good news. Founders used to raise millions just to get a prototype out. But today that barrier to test is lower than ever, right? You can run quick, cheap experiments, validate assumptions, and keep more of your equity. And if you don't yet have revenue with your startup, but you do need proof, the 5 signals investors love most are retention, a retention curve that doesn't flatline, a fast time to first value, right? Customers quickly reaching the aha moment with what it is you're creating, signed LOIs or funder commitments. 4, that NRR that shows expansion inside a pilot or cohort or your first set of beta users. And most importantly, 5, willingness signals, deposits, payments, MOUs, right? Some level to showcase that people are putting skin in the game. A lot of what I just said you should have that makes you really valuable, you want to see in those 5, we're going to talk about today on this call. All right. So one of the biggest mistakes I see kind of from my leaders from agnostically is confusing interest with validation. So this is from my brick and mortars, my small businesses, my startups, everybody, right? This is a big mistake that I see happen often. Someone saying, that sounds like a good idea, right? Or clicking a learn more button does not mean you have validated your business. Does not mean you have validated your business. That's a surface level interest. So validation goes deeper. It means answering 4 critical questions. Do they want this? Why would they buy from us? How are they solving this pain today? Why are we validating the what and the why? The what is the feature of the product. The why is the emotional driver, the credibility or the trust that makes them act. The key to this is validated opportunity lives in that overlap, not just what we think they want and not just what they say they value, but where those two align in real behavior. So the goal isn't to get compliments on your idea or your business. The goal is to uncover evidence that customers will take action, commit, pay, or change their behavior to be in alignment with your offering, because that's what's going to transform us from ideation to small business to freelancing to hustling to a validated opportunity, right? So we're going to go a layer deeper of that, validating that purchase. So validating a purchase is not enough for your ICP, your ideal customer profile. And we're going to talk about how to create an ICP next week, and how to build from your ideal customer profile. That's going to be covered in our next week session. So what's not enough is for your ICP to just like your idea. Validation means confirming that they can and will take action. So here's how I want you to think about this. Interest. This is the easiest layer. Someone clicks a link, says they'd use it, or joins a wait list. That's nice. That's not what we need, right? Second to that is engagement. It is what we need, but it's not enough. The second is engagement. This is where they give time. This is where they give feedback. This is where they even give data. So maybe they take a demo, they sign up for a pilot, they commit to a discovery call, they do a trial week, right? That's movement. Then we go into purchase action. That's the ultimate signal. Did they pay a deposit? Did they pre-order? Did they sign a LOI, a MOU, or a pilot contract? That's when you know you've crossed from idea into validated demand. The real power of this funnel is that it forces us to test not just if people care, but if they care enough to commit. Because at the end of anything we offer, you don't build credibility with likes, right? You build credibility with action. And those actions are what investors, funders, partners see as evidence that your market is real. So when we talk about validation, it's not a single yes or no question, it's a ladder. If you climb it and especially when you're meant to climb it in stages. So we have our problem validation. This is the foundation. You're not testing your product yet, you're testing pain. Do stakeholders actually feel the problem you think you're solving? An example of this is a nonprofit leader choosing to interview funders to see if they're really hungry for better reporting from their community or audience, right? Second is solution validation. Once the problem is clear, then you ask, does your solution solve it in a way that matters? That's pilots, prototypes, quick experiments. It lets you test without building the whole thing. An example of this is a local service business testing a membership model with 10 families before rolling it out citywide. And then third is willingness validation. This is the peak of the pyramid. It's not enough for people to say they like your idea. Will they put something on the line for your idea, right? That looks like that MOU or deposit or pre-order. That's a proof point that your customers have skin in the game. So an example of this is that startup founder who doesn't just gather survey results from potential users one day, but secures 2 letters of support that unlocks a pilot. So you get to notice that the ladder on this graphic also is you don't skip these steps. If you try to jump straight to willingness without proving the problem and solution first, you'll get a lot of no's. But if you work through these levels, every step builds credibility with your audience, your partners, and eventually your investors. So when we talk about validation, it's not a single yes or no question, it's a ladder. And if you climb it in stages, you get to a stronger place. So let's quickly move through these stages. So we have our problem validation. That's our first, right? You're not validating your idea yet. You're validating the problem. If 7 out of 10 people you talk to don't rank the problem you're solving as a top problem for them, you may be solving the wrong thing. That's the harsh reality, but it's better to know now than after you've spent way too much money and a year of building something. So the first question to always ask around this problem that you're solving is, do they feel the pain? And we don't mean polite agreement. We mean like urgency. If the pain isn't high on their priority list, it won't matter how clever or elegant your solution is. So how do you test this? Tools, tactics, frame it. So tools, interviews, short surveys, intercepts in the field. Tactics, panels, stakeholder calls, discovery sessions. How do you frame it? You lead with the pain and you try to figure out why now. Tie into the inflection point and a policy change or a new technology shift. Try to figure out where that problem is really living. Your KPI here is simple. What percentage of people rank your problem in their top 2 priorities? And what's the output you want, right? What's the exact language your stakeholders use to describe their pain? What are those kind of early willingness signals, like letters of intent or for a pilot or things that you can create that really is you solving that hardcore pain point they're solving? Don't worry about your product, right? Get in alignment with that pain point. And then clarity on timing and urgency. Are they ready to act now? Or is this a someday problem? And now you're selling to their someday. Get honest about that. This stage isn't about proving your solution works. It's about proving that the pain exists and it's sharp enough to demand action from your ideal customer. So then once you've confirmed that the pain is real, the next step is to test whether your solution actually solves that pain in a way people value. So this isn't about building the entire product, the program, or the service. It's about creating small, low-cost ways to see if your solution works for the people you want to serve. So questions to guide you here is, does this actually address the pain we identified? Is it valuable enough that people would change their current behavior? What part of our solution do they care about most? Tools and tactics around this look like those prototypes or mock-ups, digital or physical. Those are meant to spark feedback. A lot of people think that prototypes and mock-ups are meant to get investors ready or to, kind of show people where we've been. Prototypes and mock-ups are meant to spark feedback. Then from there, you have pilots and trial runs. That's a short-term version of the service or program, workshops, demos, or previews. This allows you now to watch people respond in real time to your product, to your solution. And then really having side-by-side comparisons of different approaches that you'll have towards how you address that pain point. So KPI signals you're looking for here is percentage of people who say your solution is better than their current option, evidence that they use or return it more than once, signs of priority, what they highlight, what they request, what are they willing to commit to, right? Other things are satisfaction scores, testimonials, and repeat participation. The output you want here is clarity on what to keep versus what to cut. So this shapes your product roadmap or your service roadmap. Evidence you can share with partners and funders and investors, right? This is now us allowing ourselves to get feedback and momentum so we can share output back out to help with our validation equation, that traction equation. And then proof that your idea isn't just nice in theory, right? You want to prove that it actually works in actual practice. The key point is this here: don't overbuild. You don't need the full version to know if it works. You just need the right test that reveals whether your solution is truly solving the problem in a way people value. So once you've validated that problem in real time and that your solution addresses it, the next question is, will people actually commit to it? So this is where validation gets real, right? Interest and compliments are not enough. You're looking for indicators of willingness. That means proof that someone is ready to put something on the line, whether that's money, time, or reputation. So you want signals of willingness that looks like deposits, pre-orders, paid pilots, like I said, letters of support, MOUs, subscriptions, membership commitments, signed agreements, test pilots. All of that is willingness, signals of willingness. So notice how easy these signals go beyond I like it. They show I'm willing to take something of value on this, right? All right, so some KPI signals you're also looking for here is percentage of people who move from interested to committed, total value of signed pilots or signed agreements, of signed willingness, and the conversion rate from interest to actual action. This matters because it allows strategic partners that traction work. Strategic partners don't just want to see engagement, they want to see proof of purchase intent. So when you have willingness validation, you've crossed the bridge from theory into traction. So across sectors, the big question becomes who's willing to stake something today to see this exist tomorrow? So that's the most credible signal you can bring into fundraising or growth conversion. Now, validation isn't one size fits all, right? As founder, a nonprofit leader, and a local business owner may look worlds apart, but the principle is the same, right? You still, no matter what sector you're in, need to identify your riskiest assumptions. You need to run a small, low-cost test, and you get to collect credibility signals. Right. So if I were to break that down into assuming who's on the call, right? My SaaS founders, you would start with discovery. You would run interviews, confirm the pain, then move in from interest to waitlist signups. My brick and mortar businesses, you don't need 3 new locations to validate, but instead you can run a 2-week membership. You can beta it with your existing customers. If 70% want to renew and you reduce process time by 20%, you validated both demand and efficiency, right? Our service providers, our SMBs, you take one piece of your work, package it into a sprint or a bundle, and sell it to 3 clients. If satisfaction scores average 4.5 out of 5, and each client refers someone else, that's repeatability proof. Nonprofits, researchers, validation here is about funder credibility. So that looks like conducting 5 discovery calls, securing letters of support, having MOUs tied to outcomes. Funders back validated pathways, not just visions. My creative entrepreneurs test, demand, buy, pre-selling. Test demand by pre-selling. Offer a toolkit cohort. Aim for 30% conversion from your interest list. Collect testimonials. This is your proof bank for future scales and visibility. And lastly, my enterprise leaders or my policy leaders, validation means internal buy-in. So draft a pilot charter, set baseline KPIs, or secure an executive sponsor. If you can map expansion pathways, you've already de-risked the scale up. So no matter your sector, I just wanted to make it clear that validation comes down to 3 moves. Pick your riskiest assumption, run one test, and track a proof point. So what does that look like? You target, you identify the riskiest assumption. Is it that people feel the problem, that your solution solves it, or that they'll commit resources to it? You don't want to try to test everything at once. You want to pick one assumption that could make or break your idea. And then from there, you're going to test. You're going to run a lightweight experiment. That might mean interviews, pilots, landing page, pre-sale. The point is to get real behavior you can measure, not just pilot interest. From there, we track. We capture the signals that matter. Was the problem ranked as top two? Did 30% of your waitlist convert? Did a funder sign a letter of support? These are the proof points you'll bring back to partners, funders, and investors traction, and they carry far more weight than claims of projections. So the loop is simple: target, test, track, repeat. Target, test, track, repeat. And before you know it, you've scaled. Okay. So if you remember last week, we met Maya. Maya, we've made as a really great example of majority of our small founder clients here at Coffer and Vine. So we're going to bring Maya back and we're going to work through Maya's work of validation in real time. And what I hope you do is you have your vision, your roadmap in your head, and you're also working through the steps that Maya is going to. So last week, Maya did the work of clarifying her vision. She put it down on paper. She removed the chaos from her vision. And now we can see how specific she got, right? She wanted to help 20 service-based SMBs streamline operations and add 15% profit margin within the next 12 months. Her values, practicality, partnership, and integrity, these are the principles that Maya has decided will shape how she'll build and deliver. And then she has a 12-month goal, securing 20 retainer clients. This matters. This is her vision roadmap because it gives Maya more than just a dream, right? It gives her a direction. Now she has a clear North Star, a set of values to guide decisions, and a measurable milestone to work toward. And here's the key: because she's clarified this, she's not about to spot, she's able to spot assumptions behind her vision. And those assumptions is what we'll test through our validation network. So Maya now has created this bold vision. It's now on paper. And she realized, you know what? This vision mapped into a roadmap, I think a KPI is needed to drive my success, right? And once those KPIs was client retention, Maya dug in and she realized to keep clients engaged, she needed a way to deliver consistent value, not just one-on-one, but at scale. That's where the idea of a thought leadership platform came up, a hub where her clients could access her frameworks in a library and watch trainings on demand and join a peer community and attend live events. Sound familiar? So now this is the same place many of us land, especially if you're a service or a small business or a brick and mortar trying to figure out how to grow. So her first instinct was, I need to build it all right now. The membership site, the video library, the events engine, everything had to be built. But here's the truth: that instinct, while natural, is dangerous. Because if you rush into execution without validation, which piece actually drives retention? You risk building a beautiful system that no one uses. So this is where validation comes in, breaking that big vision into testable steps. Let's start with step one: clarify the assumption. For Maya, once she clarified her vision and KPI, she made a big leap in her roadmap. She assumed that the best way to hit her retention goals was to build a platform with a library of resources, videos, right? All those things. Now, here's the key: that's not fact yet. That is just an assumption. And like many of us, her instinct was to try and build everything at once. This is why validation matters, because not every assumption in our roadmap deserves investment right away. Some are right, some are wrong, and some only matter at a certain stage. So your turn. Take a moment. I want you to think about or write down the biggest assumption hiding in your own roadmap. What's the thing you believe must exist? This has to happen in order for you to reach your KPI, your success, for you to reach vision. What's the thing that if this, my assumption is everybody wants this, right? Is it a new feature, a new service line, a partnership, a program? I want you to write it down. We're going to use it as the foundation for your validation test. So step 2 is all about identifying the core pain. For Maya, her assumption was that a platform with a library, videos, events, community would keep her clients retained. But the real question is, what pain is her audience actually feeling, right? Why aren't they in retention now? This is where leaders often get it wrong. We fall in love with our solution. Before deeply understanding the pain at all, we fall in love. But unless the problem feels urgent and costly to the people we serve, the solution will not stick. So instead of asking, would you use this platform? Maya needed to ask, what's hardest about staying engaged with a program like mine? Where do you feel you're losing value? That's a customer question. What frustrates you about the way you're managing operations right now? That's a potential client question. And here's the validation lens. If 7 out of 10 people don't rank that pain as a top 2 problem, it may not be worth solving right now. So, your turn. I want you to write down the pain point your customers, clients, or funders complain about the most. Not what you hope it is, but what you've actually heard them say in conversation, what they've written in surveys, or what they've said in meetings. That's the pain we're going to test first. I hope you guys are finding this helpful. So, step 3 is where validation gets powerful. Small tests, big insights. For Maya, instead of rushing to build the full platform with a library, videos, events, communities, right? She zoomed into just one assumption. Would her clients find enough value in on-demand frameworks that actually log in and use them? That became her test. That's her lightweight prototype. So I want you to also think in the single riskiest piece of your solution. What's the MVP slice you could test in 1 to 3 weeks, right? Could one feature, one service pilot, one event, one funding conversation, what's the one thing that could test and provide you with a high level of insight? Now we move to step 4, choosing the right validation method. For Maya, the first step was to spend lots of money on a platform. And she started small, right, with her customer interviews. From those conversations, she pulled out the exact pain points her clients named. Then she created the simplest possible test. Her metric, did clients open it? Did they use it? Did they ask for more? That behavior gave her stronger proof than any survey alone. That's the model for you. Problem validation, solution validation, willingness validation. So think of this moving up the ladder of proof. So what validation method are you at right now? Do you feel like you've already problem validated? Do you need to, right? Have you solution validated? Have you willingness validated, right? That's the question for you. What part of the validation ladder are you in? Step 5 is where everything comes together, right? We're going to define what success really looks like in your validation journey. For Maya, it wasn't about saying, I need a full platform. Instead, she shifted the focus to proof points that she could measure. She set a clear KPI. At least 7 out of 10 clients actively use the frameworks, and 2 request continued access. That gave her a tangible metric to prove demand before investing in a full build. And this is that key shift, right? This is what I want you to kind of get to. It's the proof point that you know how to scale responsibly. They want your customers, your funders, your investors, they want to see that you can define KPIs, you can track adoption, and you can tie those to a phased roadmap. That's what builds credibility. So I want you to write down one KPI that will prove demand for your assumption, against your assumption, right? Next step, running your experiment. Here's the important distinction. Validation doesn't mean you throw together something messy or generic. Even at the test stage, you can design in a way that protects your proprietary concepts and positions you for scale. For Maya, instead of sinking resources into a full platform build, we scoped a focused slice of her vision, an interactive library feature. By designing it as a modular, testable piece of her future product, she now can measure client engagement and retention while keeping the IP of her idea hers. The key here is strategy. I tend to call it with my clients executive strategy against your product build. We frame validation experiments not as throwaway hacks, but as intentional, funder ready tests. That way, when we go back to investors or partners, you're not just showing interest, but you're showing a proprietary pathway, you're showing a roadmap and evidence that your build decisions are smart and efficient. So I want you to think of one experiment you could run in the next 1 to 3 weeks that feels proprietary to you and your solution, not a hack, but a credible, lightweight test of your idea. I want you to write that down. All right, now we are capturing signals. This is the fun part. This is when we're just tallying up our wins. This is where validation becomes funder, partner, investor, customer ready. So for Maya, it wasn't just about logging usage in her prototype. And sometimes that's immediately where we want to go. We start counting clicks, right? She documented proof points. Proof points were client testimonials, tracked engagement over time, and even secured 2 letters of intent from clients who wanted to continue that access of that pilot and build it onto their communities. So these weren't just nice to have, they were credibility signals she could show. And that's the same for you. Engagement signals. Are people actively using it? Commitment signals. Are they willing to sign a letter of intent? Are they willing to give a deposit? Are they willing to pilot? Advocacy signals. Are they referring others, giving testimonials, or putting their name behind a concept? What matters most is that you don't stop at anecdotal interest. You turn behavior into proof. That's what shifts conversation with funders and investors, right? And it moves it from this cool idea to this founder has evidence of demand and credibility to scale, right? So I want you to write down one signal you want to capture from your experiment. Is it engagement, commitment, advocacy? Great. And then from there, we decide our next move. So Maya began with a big vision, a thought leadership platform with a library, video, community, events. But instead of building everything, she moved through validation in stages. By the end of her test, she had a real usage data, client testimonials, and letters of intent. That positioned her next move, deciding what to scale first, deciding what to double down on based off of data and signals. So validation, without validation, you're guessing and you're building blind, to be honest. But with validation, you're choosing your next based on proof, not hope. So think about your own test results. If your experiment works, what's the next piece you'll scale to? And if it doesn't, what's the pivot? So my journey doesn't end at the test, right? You've heard me say repeat over and over again because it evolved into a smarter roadmap. So her next task is to take the insight she's now gained through that pilot, through that initial test, and break her vision into modular feature sets instead of a single overwhelming platform. She now has clear building blocks, right? And I can't stress enough how much probably capacity Maya also has, because now she's not building an entire platform while trying to run a service business. So here's a snapshot of this journey, right? When we walked with Maya. Step 1, we clarify the assumption, identify core pain points, small task, right? Move through validation, define success, run the experiment, actually putting something in the world. Then we capture the signals, we look for proof points, and we decide our next move. That's what I want to see you move through. Great. So kind of identify what we've just did, and I'm going to give you your homework as well. This diagram represents the full path, vision, roadmap, scale. Over the course of this 20-week challenge we're going to go on, we're going through this roadmap with your business idea, with your vision. So we're going to walk through it all, but right now you're here. You're at the kind of point between vision and roadmap. You're at your validation. So the 4 key takeaways that you can carry forward with you this week and into next time I see you is validation is not optional. Your riskiest assumption is your starting point. Validation equals signals, not guesses. And you're building a bridge, not a leap, right? If you walk away with nothing else today, remember this: validation doesn't slow you down. It's what ensures your momentum actually leads somewhere. All right. So now it's time to take all of this and put it into action. The slides are great for learning. And I'm going to put some links here for you so you have everything we went over. But we've built a worksheet for you that does two things. One, it's going to tie back to the vision roadmap you created last week, so you're not starting from scratch. And then it's going to help you translate today's session into something actionable, not just theory, but a concrete validation plan for your business. So download that. You're going to pull from your vision map, and then you'll identify some of your riskiest assumptions on that worksheet. Then next, you'll define the core pain you believe your audience feels. And then finally, you'll set your validation threshold. Then we're showing you an example of the AI co-pilots we built for our clients. So you'll complete your step by pulling that AI companion prompt that's in that worksheet. At the bottom, all you need to do is copy and paste your answers, and it's going to give you a bridge and connect the clarity you built in week 1 with the credibility you're going to build in week 2. It should take you about 20-30 minutes. So that is your homework. All right, next week, we're moving on to one of the most powerful pieces of this whole challenge, in my opinion, and that's ICP and customer journey mapping. If this week was about proving demand, next week is about making sure you're building your entire business around real people, not just assumptions. So we'll walk through how to define your ideal customer profile, journey, map out the journey they actually take, and how to spot the gaps. So as we close, I want to be really clear about why we're doing this challenge and how Copper and Vine can support you beyond these 20 weeks. Our big vision is simple: to expand diverse businesses and products globally, one founder, one leader at a time. That's why we created this challenge, to give you tools you can use right away, but also to show you the kind of transformation possible with your idea when you have the right strategy and support behind you. So if you're ready to move just a bit faster, here's what partnering with us looks like. Our engagements start at about $5K a month, and they're not just strategy sessions like this, they're the kickoff to real execution. We come in as your augmented team. We build and refine your brand, your website. We align your product to market. We map your customers and opportunities. We create a roadmap that makes your vision into reality. So if you're interested, please feel free to reach out to us. And don't forget, you have permission to take on a big idea. Big ideas aren't always comfortable. They can feel unconventional, even scary. But they can also be a step forward. So remember, your work is about chasing yourself, not chasing hype or trying to be perfect from day one. It is about building something meaningful and validated, one step at a time. So that's exactly what I hope you're doing. Thank you for leaning in today. We have covered a lot. I hope it was helpful, from clarifying your vision to testing assumptions. So now it's on you. Go take what you've built these last 2 weeks and vision map, and then identify your riskiest assumptions.